Hello everybody, I hope that you are good. We're gonna talk really quickly about what we saw yesterday in the FOMC meeting, okay? Because there is not that much to say really. Um, but the thing is that the FOMC statement was, only repeating that the 2% inflation target remains the same, that they are not thinking about changing it, that they're gonna still be data dependent to make decisions for the next interest rates. Then the press conference was quite boring because Jerome Powell was going around in circles and he was not really answering the questions, and the journalists have to repeat all those questions several times to try to get an answer. But anyway, I think then at the end of the press conference he started to sleep a bit and he gave some more answers. Well, I remember that the first words that he said in the press conference, in the statement when he came out and spoke, he said that the bank system is solid, is sound and resilient, which it's those words were very similar to what President Biden said this week. I don't know, guys. I don't know how you feel, but when they are telling me so many times, trying to convince me that something is okay, I tend to think that it's not okay. And now if you check PacWest Bank, it's not doing great, to be honest. So I don't know if that's true. Then at the end also he said that he thinks that this time is different and that he thinks he's more likely to avoid a recession than to enter a recession. I don't know, basically saying that this time is different. We'll see about it. I don't believe that. The bank said the same back in 2008. So it's difficult to believe that. What else? Well, basically he said that they're data dependent and that he didn't say that they are going to pause the increasing of the rates now, but he said that they are obviously closer to the end of all that cycle. I think the most likely thing is that they pause here. That's why everybody's expecting. He also wanted to attack the federal bonds futures market as we anticipated because they are pricing in 3 rate cuts this year of 25 basis points each. So it was quite clear that he was going to come out and say that they're not going to cut rates this year. Okay, he said that back in March 22nd. So that's pretty much what happened. And there was not that much volatility. It seems that the volatility started coming in now. Look at that candle. Okay, and I'll tell you my view for the market right now. I think what we saw here, okay, in this zone, it's something very similar to what we saw in this area. You can see many wicks to the upside, below resistance. In this case was the 50 EMA in the 4-hour time frame. Then they rejected price. Here something very similar happened. A lot of wicks to the upside, but price didn't break up this zone. That was the liquidity pool, and now it's fallen again to test the 50 EMA in the 4-hour time frame. Now, what I think that is going on here, I don't know if I'm right, I might be wrong, but I don't see anything really bearish. Okay, what I'm anticipating really here is either to see, this is a push up, retrace to test the 50 EMA in 4-hour time frame, and then continuation maybe to the next liquidity pool. But you have to be cautious because yes, this is an imbalance too. Okay, so maybe they come all the way here, or they do some kind of I would say like a false move, like a trap. They come below the 50 MA and then they come back above it really quickly in the next candle and they go to the next liquidity pool. So for now, what I'm gonna do is I'm gonna wait and see how this candle closes. That's gonna close in 20 minutes. And how the next one goes. But if this one closes above the 50 MA, or if this one closes below the 50 MA, but we saw the next one closing above it, okay, then I would consider that that was a false move and that we are okay for continuation to the upside to the next liquidity pool. Okay, so that's pretty much everything that I have in my head. I know that many traders are gonna start drawing this kind of uptrends. And I have to say that if price comes to this zone, the most likely thing is that there is a lot of traders placing their longs here. Maybe it works again, okay? But at some point, this trend line, the most likely thing is that it breaks down, okay? Usually, I'll tell you, I'm trying to figure out more about how the market maker plays this kind of trends, but usually what they do is like, they are spiking price up, they come back it, they spike up, they come back to it again, and then in one of these, what they do is like they do a very nasty spike up, something like this, and then they break it. They break below. Okay, excuse me for all. I mean, I should have used the straight lines. Let me let me remove that. So something like this. Okay, we could see if the 50 MA gets invalidated and they come to the trend line, and then we see some kind of support. Usually, what I see that the market maker does is right before breaking this trend line, they usually like to spike up quite a lot more compared to the previous times, and then they have a very sharp dump to break below, because many traders are gonna say, okay, if this hold three times, why not fourth time? So they're gonna place their longs here, and then boom, they're gonna get trapped. Okay, so keep an eye on that. But for now, what I'm more gonna look for is going to be to hold support in the 50 MA in the 4-hour time frame, and maybe we could see some kind of push up, retrace continuation to the next liquidity pool. Okay, now let's have a look at the liquidation heat maps. Let's see if they back up this thought, or if we have to maybe consider again a new projection. I'm here in High Block Capital. Let's start with a 12 hours time frame, okay, to get some context. Okay, I see that they've just hit these liquidations. There are some more at 28,600. Maybe they come here first, and maybe we get that little fake move below the 50 MA. Let's see what happens. But you can see that 29,525. There is quite a lot of liquidations, and this zone matches with the liquidity pool we were talking about. Then next, the 7 days time frame. Let's have a look. Okay, it's just loaded. Okay, this is getting very interesting, because we can see that there is a lot of liquidity again between 29,500 and 29,600. Okay, that's again the liquidity pool zone. So why not? We might see this zone getting hit. Okay, we only need that 50 EMA in the 4-hour time frame to hold. Also, you can see quite a lot of liquidity at 30,300. That matches with above this previous high. All right, 1 month time frame. I'm expecting to see quite a lot of liquidity to the upside. Correct. Let me check this. Wow, this is really interesting, because you can see that below the previous lows at 26,400 there is a lot of liquidity, but it's quite clear that there is quite a lot more liquidity to the upside, in the shorter term. This is 1 month time frame only. So 30,300, 30,800, and then of course, again, above the previous highs, because the previous high was 31,100, and there is quite a lot of liquidity at 31,300. Okay, and if we go to the 3 months time frame, let's see what we see. Now you can see that it's getting more divided in this zone, because the liquidity at 22,500, this is still there. It's brutal. Also, again, in the 25,400, 600, this makes sense, because this area, it was a very strong previous resistance that it hasn't been tested as support yet, so it's a zone of interest in the chart. And then to the upside, I see quite a lot of liquidity, to be honest, at 31,300, and even higher at 33,400. I'm gonna say that I'm not gonna favor. Well, look, let's put it like this, okay? If we hold above the 4-hour 50 EMA, okay, we're gonna favor higher prices. I'm gonna favor even 30k. 30k is on the table, as long as the 4-hour 50 EMA holds, or even 31. Why not? 31k, why not? Okay, we're in the Bitcoin chart. So as I was saying, as long as we hold the 50 EMA in the 4-hour time frame, we're gonna favor higher prices. 29,600 seems quite interesting. And even, to be honest, why not this zone over here? Above all these highs, that's 30,300. We go to the daily time frame. Let's see what the daily time frame tells us. Well, you can see that this zone is also a liquidity pool. Check this zone. Okay, this is another liquidity pool. So why not all the way to 30,300? I don't see why not. Will you need that 50 MA to hold? Now, in the daily time frame, the 50 MA has been holding as support so well. You can see how many tested. 1, 2, 3, 4, 5, 6. It has tested support 6 times. So it's proven its worth. Okay. Now, this is only telling me that, you know, we have quite a solid support here and higher prices are likely, especially 29,600 and 30,300. But if we start to lose this 50 MA, the 50 MA in the daily time frame, then I've said this many times, we're gonna look at this zone, the 25,000 zone. Okay, so that would be, you know, something like this. Yeah, 25,250. That's the zone. That's the next zone if we lose the 50 MA in the daily time frame. Sorry for speaking so fast today, but I'm running a bit late with this video. I want you to see it as soon as possible. Okay, so thank you so much guys for watching, and I'll see you soon.